1999, you could have bought the entire NVIDIA company for $563 million. Today, that same company is worth nearly $5 trillion. That is not a typo. $5 trillion. And the most important question is not how it happened, it is whether the story is over. Because what NVIDIA built is not just a company, it is the infrastructure that the entire future of technology runs on. And today, I am going to show you exactly how it works.
Before we talk about the money, let us understand what NVIDIA actually is. Because most people hear the name and think video games, graphics cards, that thing in a gaming computer. And 20 years ago, that was completely accurate. NVIDIA was a company that made chips that made video games look beautiful. That was the whole business. But here is what changed everything. The same chip that renders a video game, the GPU, turned out to be extraordinarily powerful at something completely different: training artificial intelligence, running machine learning, processing the kind of mathematical calculations that AI systems require at a scale and speed that traditional computer chips simply cannot match. And when the world's biggest technology companies, every cloud provider, every AI lab, every major enterprise realized they needed to build AI infrastructure immediately, there was essentially one company on Earth with the hardware, the software platform, and the manufacturing relationships to supply it: NVIDIA. As of mid-2026, NVIDIA's market capitalization stands near $5 trillion, making it the world's most valuable publicly traded company. And it got there by being in exactly the right place, with exactly the right product, at exactly the right moment in technology history.
I want to tell you about Ryan. Ryan is 38 years old. He works in technology sales. Back in 2019, he was looking at his savings and thinking about where to put them wisely for the long term. A colleague mentioned NVIDIA. Ryan looked at it briefly, saw that it was mostly a gaming chip company, and moved on. He thought, gaming chips, that is not the future. He was completely wrong. Not because he was unintelligent, but because he did not understand what NVIDIA was actually building underneath the gaming business. By the time Ryan understood, by the time most people understood, NVIDIA shares were up over 850% in 5 years. Ryan's story is not about regret. It is about one of the most important financial lessons that NVIDIA teaches. The companies that build the infrastructure of the future are almost never recognized for what they are until after the recognition becomes very expensive.
Here is where the economics become genuinely extraordinary. NVIDIA's data center segment, selling AI computing infrastructure to cloud companies and enterprises, now accounts for nearly 90% of all revenue. Gaming, the business that built the company, is now a small fraction of the total. NVIDIA charges between $25,000 and $40,000 per GPU while maintaining a 75% gross margin. To put that in perspective, Apple, considered one of the most profitable consumer companies in history, runs margins of around 46%. NVIDIA nearly doubles it on hardware. In the most recent quarter, NVIDIA posted revenue of $81.6 billion, up 85% year over year, with net income of $58 billion. That is not annual profit. That is a single quarter. The reason NVIDIA can charge these prices and maintain these margins is not simply because they make good chips. It is because of something called CUDA, and understanding CUDA is the key to understanding why NVIDIA's position is so difficult for any competitor to challenge.
CUDA is NVIDIA's proprietary programming platform, launched in 2006. For nearly 2 decades, it became the default language for AI and scientific computing. Here is why this matters so much. Imagine a language, not English or Spanish, a programming language. And imagine that every AI researcher, every machine learning engineer, every scientist doing computational work spent the last 15 years learning to write in that language, building their tools in that language, designing their systems around that language. Now imagine switching to a different language entirely. Even if the new language is technically better, you would have to retrain every engineer, rebuild every tool, redesign every system. The cost of switching is so enormous, so disruptive, that most organizations simply do not do it. That is exactly what NVIDIA built with CUDA. Customers are not only buying silicon, they are buying a working platform, the chip and the software ecosystem around it. And once an organization builds its entire AI infrastructure on NVIDIA's platform, the switching cost is so high that the relationship becomes essentially permanent. This is what economists call a moat, and NVIDIA's moat is one of the widest in the history of the technology industry.
Here is something about NVIDIA's business that most people do not know. NVIDIA does not actually manufacture its own chips. It designs them with extraordinary precision and billions of dollars in research, and then outsources the physical manufacturing to specialist foundries. This model is called fabless. No fabrication facilities, no enormous factory overhead, no manufacturing workforce. NVIDIA generated $5.14 million in revenue per employee in fiscal 2026, roughly 2.5 times Apple's revenue per employee, and nearly 3 times Microsoft's. What this means is that NVIDIA operates with a level of financial efficiency that is almost unprecedented at its scale. The company focuses entirely on what it is best at, designing the most powerful AI chips in the world and building the software ecosystem around them. Everything else is handled by partners who are themselves world-class at what they do. This structure keeps the business lean, keeps the margins extraordinary, and keeps NVIDIA's internal resources focused entirely on staying ahead of the competition through continuous innovation rather than managing manufacturing complexity.
So who exactly is spending tens of thousands of dollars per chip and buying them by the thousands? The top 5 cloud service providers contribute to about 50% of data center revenue and are projected to spend nearly $700 billion on AI infrastructure in 2026. Every major technology company building AI systems, the cloud providers, the AI research labs, the enterprise software companies, is in a race to acquire as much computing capacity as possible. Because in the AI economy, compute equals revenue. Without investing in AI infrastructure today, revenue growth would be constrained. This creates a dynamic that is genuinely remarkable. NVIDIA's customers are not buying chips because they want to. They are buying them because they have no choice. The alternative is falling behind competitors who are buying them. This is the kind of demand that sustains a business through economic cycles. Discretionary spending driven by consumer preference, but strategic necessity driven by competitive survival. Companies that supply strategic necessities to other large companies are among the most durable businesses in the world.
Ryan eventually did study NVIDIA properly, not to chase what he missed, but to understand the lesson it contained. And the lesson Ryan took from NVIDIA had nothing to do with regret about the past. It had everything to do with how he would think about the future. The companies that build infrastructure, not products, not services, but the actual underlying infrastructure that everything else runs on, tend to create the most durable and extraordinary value over time. NVIDIA did not make a product people wanted. NVIDIA made the foundation that the products people wanted were built on top of. The shovel in the gold rush, the railroad in the industrial era, infrastructure of necessity rather than the product of preference. Ryan began looking at every investment opportunity through this lens. Not, is this company popular right now, but is this company building something that the future cannot function without? That question, asked consistently and answered honestly, is one of the most powerful filters an ordinary investor can apply to long-term thinking about where real value gets created.
No honest analysis of NVIDIA is complete without acknowledging the risks. Because at $5 trillion in market value, the expectations built into the price are extraordinary. Geopolitical challenges loom large. U.S. export controls limit China access, one of the world's largest potential markets, creating uncertainty about a significant portion of future revenue. Competition is real and growing. Google and Amazon's internal silicon projects target specific workloads that could erode some NVIDIA market segments over time. And the history of technology investing is full of companies that dominated their era completely and then were disrupted by something they did not see coming. NVIDIA's moat is wide, but no moat is permanent in technology. The honest investor acknowledges both the extraordinary strength of what NVIDIA has built and the genuine uncertainty of what the competitive landscape looks like in 10 years. Understanding a business deeply enough to see both its power and its vulnerability and making decisions accordingly with patience and long-term thinking is the foundation of sound financial judgment.
NVIDIA is not just a company. It is a lesson in what happens when genuine innovation meets perfect timing, and when a business builds something so deeply embedded in the infrastructure of the future that the future literally cannot run without it. Jensen Huang started building graphics chips for video games in 1993.
He had no idea he was building the engine of the AI revolution. He just kept improving, kept innovating, kept building. 30 years later, the world caught up to what he was building. The lesson is not buy NVIDIA. The lesson is far more valuable than any single stock. The most extraordinary value in any era is always created by the people and companies building the foundation that everything else stands on. Not the loudest, not the most visible, not the most fashionable, the most foundational. I am Mr. Max Wealth. Build foundations. Think in decades. Stay patient. See you in the next one.